Utilities.
Yeah, big focus on energy for us this morning because Brandy and I just trying to stay on top of these oil prices at the moment. I mean, you mentioned the fluctuations. Yesterday it was, 116 or 112 or thereabouts. Today it's down 10 at, 104 or thereabouts?
104.30.
It's just up and down at the moment. What does it mean and how is that the case? Justin Dargin, senior energy and geopolitical expert at the University of Oxford, is here to put it into some context for us. Joins us live on the line, live on Microsoft Teams. Justin, good morning to you.
Good morning. Thank you for having me.
We're going to start with oil, if we may, and some big announcements over the week having an impact on the market. Saudi Aramco, one of those organizations that when they speak, the world listens, the world's top oil exporter, cutting June prices for buyers in Asia and Europe. Great news for consumers there, but not doing it for the US. Why?
Well, I mean, one of the reasons is that if we look at it in a broad perspective, Saudi Arabia foresees that the demand trajectory in Asia is actually faltering, is looking a bit weak. And this is based on the fact that China is still pursuing its zero COVID policy. And as a result, there are many major population centers that faced a host of COVID-related restrictions. So, of course, demand has lowered due to that. And then also there's a reduced demand from Japan as well, as Japan is entering into its Golden Week holiday season. And then also it is entering into the period where it's going to implement refinery turnarounds. So that's one of the reasons why we're starting to see the fact that Saudi Arabia wants to slash prices for its Asian customers. And there is a fair amount of competition within OPEC Plus as well. So even though there is coordination, we do see that Saudi Arabia is attempting to woo some of the customers that some of the other OPEC member states might have. Now, one of the reasons why it didn't reduce prices for the U.S. is that, just simply put, the U.S. economy is still going strong. As a matter of fact, the U.S. economy has returned nearly to pre-pandemic levels. The unemployment rate is extremely low, nearly reaching full employment, you can say, and that there are about 1.9 jobs for every job seeker. So the labor market is actually quite tight. So the U.S. market is doing fairly well, I guess you could say, considering all the circumstances.
And obviously that's having a direct impact on the price of oil at the moment. And we come in and try and make sense of it every morning here on the show. But there have been fluctuations. Can we expect more changes, ups and downs in that price?
Oh, yes, absolutely. One of the things is that if we look at what was happening a few months ago, most of the focus was on supply issues. So, of course, there was the buyer's strike that was being implemented, of course, from the U.S. and a potential EU embargo. However, now there's much more of a focus on demand. And I think that this is one of the major issues. So definitely we're going to see a lot more volatility going ahead, especially when the EU embargo will most likely kick in fairly soon.
Talking of oil and talking of the elephant in the room at the moment, Russian oil, what's the latest in terms of the supply at the moment? Obviously, we know that sanctions being designed at the moment to try and limit that supply. But is Russian crude still flowing?
Oh, absolutely. Russian crude is still going strong, so to speak. And this really lays bare the difficulty in trying to coordinate continental-wide oil policy on Russia. And I think even Henry Kissinger had stated in the 1970s, when he wants to call Europe, to whom should he call? I mean, so this really, we can see that perhaps Russia is profiting, so to speak, from many of the divisions that are within the EU at the moment. And really most of the rejection on implementing a full EU oil ban actually is coming from Hungary. So the EU is attempting to bring Hungary into the fold so that it would be able to have its acceptance on the implementation of a full Russian oil ban.
Turning our attention very quickly, if we can, to gas prices. I'm noticing interesting figures coming out overnight from the United States. National average for regular gasoline rising to $4.32 a gallon on Monday. That's just a fraction of a penny shy of the all-time high at the pump over in the United States. Obviously, that's going to weigh on inflation.
Oh, yeah, it will. And that's one of the reasons why the Fed has taken the step of increasing the interest rates by a half a percentage point. And this is very important because the Fed is seeing that the economy, or at least it perceives the economy as being a bit overheated, and it wants to put a brake on that. And it thinks that one of the ways it can do so is utilizing, of course, a hike in interest rates. And so it remains to be seen what's going to happen with that, because it's a very delicate balance, because you don't want to tip the U.S. market into a recession. That's definitely one thing that you don't want to do in a bid to try to tame inflation.
Turn our attention very quickly, if we can. I've got about a minute left with you, Justin, to solar energy projects. Obviously, a big focus on oil and gas at the moment, and maybe we're not spending enough attention on solar projects. Are they continuing apace at the moment, or are they also suffering from supply chain?
Well, with solar projects, there is an issue because the U.S. Commerce Department has decided to open an investigation against whether China is exporting surreptitiously solar panel products throughout Southeast Asia. So as a result, this has thrown the U.S. Domestic solar market into disarray, potentially impacting over 300 projects. Now, this really is at odds with the Biden administration's intention to aggressively pursue its climate goals, to indicate to the world that it wants to take leadership after 4 years of the Trump administration. So we've seen that how these two actions are actually working at odds, and that the U.S. is failing to really have a type of coherent policy on how it intends to pursue its renewable energy goals.
Appreciate your insight this morning, Justin. Thank you so much indeed for joining us. Justin Dargin is the Senior Energy and Geopolitical Expert at the University of Oxford, giving us all the latest insight in the world of energy.